But right now, 4 regional Fed chiefs are set to join the Federal Reserve's rate-setting panel in January. Voting slots at the Fed rotate each year, but will a new group bring more or less consensus over rate decisions in 2020? Yahoo Finance's Fed head Brian Cheung joins us now. We're talking about the Doves and the Hawks.
That's right. So as a reminder, we have the Fed board members, right? Jerome Powell, Rich Clarida, Lael Brainerd, 2 other members. They're in D.C. They have permanent voting, votes in the FOMC. Excuse me, but there are 12 Federal Reserve Bank presidents that are scattered across the country. They represent different regions of the country, but only 4 of them each year actually have votes. Now, all 12 of them participate in the meetings that we have every 6 weeks. They talk, they have a robust discussion, but only 4 of those presidents ultimately end up voting. With the calendar year now flipping to 2020, we're going to have 4 new characters on the board. So they are Loretta Mester from Cleveland. There's also Robert Kaplan from Dallas. There's also Minneapolis Fed President Neel Kashkari, and then Philadelphia Fed President Patrick Harker. In terms of where their ideologies lie, Neel Kashkari, no surprise to anyone, is perceived to be a dove. He has argued for even more aggressive rate cutting to let the labor market tighten. But then on the other hand, you have Loretta Mester, who I had the chance to speak with in Jackson Hole, who has actually argued against some of the rate cuts that we saw this year, saying she would prefer to see what the actual impact of the trade negotiations are on the economy in terms of a possible negative impact. So this is going to be interesting. What we do know is that from the dot plot projection that we got from the Fed meeting a few weeks ago, all the members seem to be on the same page that for right now it seems appropriate to at least hold at the current level of 1.5 to 1.75 at least through 2020.
I mean, it's interesting. Somebody like Kashkari has talked about wanting to keep rates low unless we really see a significant uptick in inflation. So it seems like there's nothing on this change to the composition of the voting members that would change the trajectory of the Fed.
And that's exactly right. You could almost compare him to being the member of the board that was most dovish on the last FOMC, currently 2019, which is James Bullard from St. Louis. In one meeting, you'll remember that he actually dissented from a decision to cut by 25 basis points because he actually wanted 50 basis points of cuts in that particular meeting. So Kashkari could be seen as basically the same voice, replace in, replace out.
But if the president finally does submit his 2 nominees to the Senate for approval to the Board of Governors, and we know the president wants lower interest rates, the president even talked about negative interest rates. Judy Shelton had actually in public statements almost appeared as if she would follow what the president was pushing for.
Rates. Yeah, exactly. Now, Chris Waller, who's the other nominee, and Judy Shelton, their nominations have not been sent to the Senate. We're heading into an election year next year. The Senate is about to take on an impeachment trial. So whether or not they even have the bandwidth to get those nominees confirmed is going to be one thing. We haven't seen, for what it's worth, all 7 members of all 7 seats of the Board of Governors actually filled in many years. So, it's probably not a lot. There's not a lot of pressure for the administration to get those 2 nominations through, but if that were to be the case, yes, you could argue that that would be a further dovish tilt on the current Federal Reserve.
Yeah, so, all right, so the Fed is on hold right now, really not expected to do anything next year, at least based on where we are right now. It seems like the variable could be what happens with the don't call it QE. $365 billion so far is the expansion of the balance sheet since September. That's a breakneck pace. How long does that continue? What do these new incoming voting members think about these programs? And there's also a potential standing repo facility as well.
I mean, the real jolt to the re-expansion rather, of the balance sheet was the repo facility that the New York Fed offered by, originally it was this very small amount. They then expanded to the tune of $120 billion a month. What we do know is that the Federal Reserve itself has then started expanding the balance sheet, promising to buy short-term Treasury T-bills at a pace of about $60 billion per month. They said that that's the game plan through the first half of next year, at least through the first half of next year. So at the very least, maybe we could see it extended through the rest of 2020, or maybe on the upside, they could actually increase that pace of purchases in 2020. It really depends on what they're seeing. Jerome Powell has said in press conferences, telling reporters many times that the strategy in terms of the balance sheet is going to be flexible. So it's entirely possible that if more recession worries emerge in 2020, that they then try to actually increase the pace that they're currently buying at. So that's definitely going to be a variable. What's interesting and what's important to note is that the FOMC does have a say in terms of the balance sheet growth. Interest rate policy policy is the thing that people tend to focus on largely in terms of, are rates going up or down? But the balance sheet is going to be a big part of those discussions as well.
Yeah, definitely. Thanks, Brian.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.